All right. Hello, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our options trade of the week. I wanted to get a video out here this afternoon because I've had a number of similar questions come in this week. There's been a lot of concern from traders knowing that markets have been ultra active the last number of months. We have seen volatility elevated at levels that we don't typically see for this long of a stretch. And we're also heading into a stretch here this fall where we've got elections upcoming. We also have the uncertainty with COVID continuing. There's a lot of uncertainty and concern with being involved in the markets. The problem with that whole idea, I understand the concern. However, when you trade options, you've got to remember that we can control our risk better than any other market out there. When you take a look at volatile markets, that's exactly what we want as options traders. And I'm going to walk you through a trade here today where we can be active in the markets. We can make an assumption without tying up a ton of capital. We can put on a trade here with less than a couple $100 of risk. That allows you to stay active. It allows you to take advantage of the movement that we have without needing to be all in all the time with the market. So wanted to talk through a trade here in detail, walking you through a setup that we actually took with our students this afternoon, just to highlight our approach to the markets. So let's talk through Uber. This is symbol UBER. This is a 195-minute chart. So you're going to get 2 candles a day instead of the typical 1 that you get with a daily chart. It's our sweet spot. It's what we find works really well for a swing trading approach. If you take a look at our indicators, the one that I'm highlighting down here is the red and yellow histogram. It's what we call our pulse indicator. Notice how the indicator went yellow. And for the last 6 bars here, we've had yellow showing up. What that indicates is price action has hit between a 1 and a 2 standard deviation extreme on the upside. Price action is overbought. We're extended here. Doesn't mean the market can't head higher. It just means it's not statistically probable. Out of this pattern, when you start to see a string of yellow bars on our pulse indicator, that will typically lead to either a stretch of sideways action or even a reversal in the other direction. In this case, a reversal to the downside. Notice, in order to get that overbought condition, in order to get the yellow bars, we have seen pretty much a straight rocket ship move to the upside. We have gone from a low back on August 20th, the low down around 28.50, up to a high here this morning around 38.50. We've seen a $10 rally almost straight to the upside. We've seen very little pause here on Uber over the last couple of weeks. We are overbought, looking for a move lower, and we did see a reversal off of the highs this afternoon. See how we got that red candle here this afternoon? We hit that high earlier this morning. We did see that reversal. This has us expecting either a period of consolidation, a sideways move, or even a pullback to the downside. So here's how I took the setup. If I go over to a trade page here on Uber, if I were to come in and just buy a long put option, the problem with that approach is it's too aggressive. The only way you make money is if Uber moves to the downside, and it does so quickly. I don't want to be that aggressive because we know on the downside, we've seen almost every dip bought here recently. We've seen very little follow through on the downside. So I want to be a little bit more conservative. I want a more user-friendly type trade. So instead of buying a long put to lean a little bit bearish, we're going to come in and sell an out of the money call spread. We're going to use the October monthly options, which have 31 days left to expiration. To put this trade on, I am going to go to the 39 calls. I'm going to highlight them right here. They have a 64% chance of closing out of the money. I'm going to right click on the 39 calls. I'm going to go to sell, and I'm going to select vertical. It's going to bring up an order down at the bottom where I am selling the 39 call, and then I'm going to switch the 40 call here to 41. We're going to buy the 41 call at the same time to make sure that we're in a risk-defined trade. If all I did is sell the 39 call, I have too much risk. I'm going to be in an undefined risk type of position. I want to define my risk by also buying the 41 call. This is known as a call credit spread. It's a neutral to bearish position. We're going to collect 58 cents or $58 per spread to put this position on. That's going to leave our risk at $142 per spread. That's the amount of capital that's going to be tied up to put this position on. So a very reasonable cost, right? You're not tying up thousands of dollars here. You can certainly trade multiple contracts or multiple spreads if you want to use a bigger position size, but the minimum here is $142 of capital per spread. Notice that I am risking $142 to make 58. What gives there? It's not a very good ratio, right? The reason I am okay with risking almost 3 to make 1, I have 5 ways of making money on this position. Ultimately, I would love Uber to move to the downside, but it doesn't have to. I make money if Uber moves up, down, or sideways as long as price stays below $39.58. That $39.58 number, that is calculated by taking my 39 strike of the call option that I'm selling, and we're adding on the 58-cent credit that I'm collecting to put the position on. So now I don't care if Uber moves up, down, or sideways. As long as it stays below $39.58, I make money. I love this trade because now it takes the pressure off needing to be perfectly right on the directional move in the stock. But then also, I put time decay in my favor. Every day that passes, that helps me. I make money from the time decay adding up. And then I also make money from volatility decreasing if it does. So now I've got 5 different routes that I can follow to make money. If I bought a long put here instead to put on a bearish trade, I only make money if Uber moves lower. I now only have one way of making money. So this is just a more forgiving trade type. Again, our line in the sand is at $39.58. I really don't need to track this one closely all day long. This is a trade where if I come in and check it maybe once or twice a day, as long as price is below $39.58, I'm okay. I can make money on the position. It's not a huge home run profit potential. That's not the design of the trade. The design of the trade is to provide a very high probability of success, allow us to generate some income in a very indecisive market. So now we're not intimidated by the volatility. We're taking advantage of the volatility. So we're selling a call spread here on Uber. How do I manage the position? The $58 that I'm collecting to put the trade on, that is our maximum profit potential. It's the most I can make. What I'm going to do is my target on this trade is when I can close the position out and keep between 50 and 75% of that number. The problem with holding to expiration, okay, that's the only way that I can keep the entire $58. The problem with that approach is as we get closer to expiration, the options become more sensitive to changes in stock price. It becomes more aggressive at that point. I would rather close out of the trade early, book a partial profit, and free up the capital for the next trade. My target on this trade initially is 15 cents. If I can buy the spread back for 15 cents, that would give me 75% of my maximum profit. So anytime over the next 31 days, if I can buy the spread back for 15 cents, I'll go ahead and do so, book the profit, and move on to the next trade. So we'll continue to track this one. I'll be back with another video here in the coming days. We'll keep an eye on it, see what it does. If you have any questions on this trade or any other trades that you're looking at, feel free to email me directly. More than willing to help out. My email address is mike@netpicks.com. So I'm going to wrap this video up here. Enjoy the rest of your day, everybody, and we'll be back with you over the next few days with our next video.